Back on Morning Mover, shares of Amazon rallying 8%. Other big retailers also surging in the pre-market after positive developments between the U.S. and China. Now, the word uncertain was used 11 times on the company's earnings call earlier this month. The stock had been down 12% this year entering today. Best Buy, Stanley Black & Decker, and other chip names also among the big winners this morning. Time now for Options Corner. Joining us now to take a deeper look at the chart for Amazon, we've got Duke of Data himself, Rick Ducat. All right, Rick, let's talk about this chart. Amazon seeing a big move to the upside today, but what are the trends that you're paying attention to?
Yes, and this chart here, this comparison chart, this is a Friday's close, so this could be quite a bit different when things open up here. But during the past year, the consumer discretionary sector has been outperforming the broader market, while Amazon is outperforming both. And it does seem very tightly correlated to the S&P 500, kind of reflecting our news-driven environment right now. But nevertheless, if we were to look more at our candle chart here, we can see that the mark price, the pre-market price, will actually be around here, near like 210 or so. So we have broken above our moving averages, and we look like we're on pace to open above these previous highs near 206. So a pretty interesting development here. We saw very heavy volume during our tariff-related news flow here, and now things seem like they are perhaps going to make a bit more of a push to the upside. RSI was already improving on Friday, and we see that now we were above that 50 midline, generating another bullish signal. So this looks like it will improve going forward as well today if things do hold on. So we can see now our volume profile point of control. That's the area from which we jumped off of here near 187. That could be a key downside area to continue watching here. But to the upside, a bit more volume comes in, 225 to 230.
All right, that's our Rick Ducat, lead market technician. Now to take us through an example trade, we've got Tom White, senior options contributor and co-host of Fast Market. All right, Tom, so what's the process here? How do you approach an example trade for Amazon, especially given the move that we're seeing in the pre-market in light of the news between the U.S. and China?
Yeah, after that big drop where the stock was in bear market territory, we're going to open up here just above $209 a share. That's still going to be about 13% off of those all-time highs that we saw in early February of about $242. But making some inroads here, right? The stock's going to open up about down 4% on the year so far. Busted above its 50-day moving average late last week, and now above its 200-day moving average, which is about $199 a share. So momentum moving to the upside, implied volatility levels collapsing. We got the VIX below the 20 level this morning. So I looked at a directional biased trade that takes advantage of a low implied volatility level while still giving me a directional type of theme on this type of trade. So going out to the June monthly cycle. So I've got 39 days to expiration on this one. I'm giving myself a little bit of duration for the stock to continue move higher on this bullish call vertical, where I'm going to buy this in the money 205 strike call. It's got that higher delta. It reacts more like the stock. But then to offset some of the costs on that bullish call purchase, we're going to sell the 220 strike call. That's where you want the stock to go above in this type of trade setup. So bullish $15 wide call vertical. You're going to pay roughly about a $7 debit if the stock opens up around 209. That's going to be your risk, $700 per spread, with the ability to make $800, right, if it goes above 220 at expiration over the next just over 6 weeks here on this particular trade. Break even of $212 to the upside. That's less than 1.5% above the current share price here in the pre-market. So you don't need a monster move to the upside. You just need this thing to kind of continue to grind higher on back of maybe more tariff news that's positive for Amazon on this one. But so pretty straightforward. The idea here is the stock continues to move higher, and because you're buying a vertical like this, as far as trade management goes, yeah, you want it to go to 220, right, over the next 39 days, but you have flexibility because you're purchasing this vertical where over the next 39 days, any day that it goes maybe up to 215, maybe up to 220, I can start parsing back on my position, whether you're doing single contracts or multiple contracts. So it gives you some flexibility as far as trade management goes.
I like the flexibility with this one, and I suppose certainly a bullish example trade approach makes sense in the context of what we're seeing right now. Yep. All right, that's a bullish example trade for Amazon. That's our Tom White, senior options contributor and co-host of Fast Market. Thank you, Tom.